Thank you all so much for joining us today for the online launch of RIAA's Nature Investor Toolkit. I'm Guy Williams, the co-chair of RIAA's Nature Working Group. We'll be muting everyone, but encouraging you all to post your questions in the Q&A function throughout the discussion. I would like to begin by acknowledging the land that I'm joining on this call today, which is located in the Ngara country of the Darkinjung, the Darug, the Darawal, the Gundungara, the Wonnarua and the Wiradjuri peoples up here in the wonderful Blue Mountains in my home of Wentworth Falls. I would also like to extend this acknowledgement to the traditional owners of the lands from which everyone is calling on today and to all First Nations people present in this meeting, and I pay my deep respect to their elders past and present. Before we kick off, it's important to reflect what we mean by nature, and that nature does mean different things to each of us. We recognize that each of us may be spending time at the moment to consider what nature means to our organizations and to our works to connect and value nature more effectively. This has been reinforced by the amazing array of conversations over the past few weeks at the Global Nature Positive Summit in Sydney, and now heading into next week's Global Biodiversity Framework discussions at the Convention on Biological Diversity Conference of Parties in Colombia. And a quick note of safe travels to any of you on this call who might be heading over to those meetings. For the purposes of this work on the toolkit, we take the definition of nature from TNFD and from the IPBES conceptual framework, that being that nature is the entirety of the natural world, with an emphasis on the diversity of the living organisms, including us, and our interactions and the interactions of all living creatures with their environment. This toolkit was prepared by the Responsible Investment Association of Australasia's Nature Working Group, which is a collective of representatives from the Australian and Aotearoa New Zealand investment community working together to support members in their stewardship responsibilities to protect nature and biodiversity in their businesses and their portfolio of companies, and to bring nature more deeply into these conversations. The Nature Investor Toolkit serves as a primer for understanding nature-related risks and opportunities and supporting investors to assess, engage, and take action. Today, we'll be hearing from some of the amazing toolkit writers who worked with myself and with Claire Molinari, the co-chair of the Nature Working Group, to develop this amazing product that we have. So we're joined by Claire, which is wonderful, by Joanne Lee from First Sentier Investors, from Tarina Williams from NZ Super Fund, Olivia Back from Pollination, Julie Oleski from ISS ESG, and from Madeline from Aotearoa. I'm now going to hand over to Estelle Parker, the co-CEO of RIAA, for some opening remarks and thank yous. Thanks, Estelle.
Kia ora, good morning. Thank you, Guy. My name is Estelle Parker. I'm the co-CEO of RIAA, coming to you from Wiradjuri country today. Now, I don't need to repeat to this group the huge dependence that our economies and hence our investment portfolios have on nature. When we established RIAA's Nature Working Group over 3 years ago now, this was investors getting together to try to problem solve for the risk that they increasingly realised was sitting on their balance sheets. We now have a myriad of solutions to addressing those risks, and we're moving the conversation from risk to opportunity. And this has been beautifully articulated in this toolkit. This toolkit constitutes a one-stop shop for investors seeking to navigate this space, and it includes the most extensive and detailed list of searchable resources that I have ever seen. Having participated in last week's Global Nature Positive Summit in Sydney, I can see that nature's time has come, but it's important not to view nature in a vacuum. Climate, social justice, First Nations people's rights, they all go hand in hand with nature in investment decision making. And Indigenous knowledge and ties to land are key to supporting fundamental shifts that halt and reverse the destruction of nature. Indeed, since RIAA was established more than 24 years ago now, I would argue that we have never been closer to viewing ESG themes like nature through a systemic lens. RIAA's growth in membership from a niche ethical investment collective to an industry group covering around 75% of managed funds in Australia and Aotearoa, New Zealand, shows just how keen institutional investors and impact investors are to come to grips with systemic issues like nature and how to integrate these into investment decision making. But as we move towards better understanding of how investments are impacted by and impact on nature and biodiversity, we need to be prepared to adjust the risk profile of investee companies. And we also need to be prepared for some uncomfortable truths about our investments' impact on nature to be revealed. We then need to be prepared to roll up our sleeves and do the hard work to protect and restore nature and contribute to nature positive outcomes. The challenge is not insurmountable. RIAA and other industry groups are here to help. And for those not yet involved, do have a look at the Nature Working Group, the First Nations Peoples' Rights Working Group and Human Rights Working Group as avenues through which you can improve your understanding and knowledge and get involved in developing industry-wide solutions like this one. So enormous thanks to the Toolkit's incredible authors, and yes, I'm going to read them out now. Claire Molinari, Guy Williams, Joanne Lee, Julia Lesky, Olivia Back, Madeline Combe, Malia House, Ella Robinson, Tarina Williams, Sophie Leach, Emily Davies, Max Dalton, Greg Munford, Tim King, Fiona Manning, and Nyanisha Samarakorn. Thanks very much to Rachel Allen Backus for incredible editing work. And thanks also to the reviewers who provided feedback. Indigenous consultant Stan Louis, Matt Cranford, prominent environmental scientist Julie Slater, Sonia Lichtman, Romy Faulkner, and the team from the Australian Conservation Foundation. And of course, a special shout out to ongoing support from ISSESG, Pollination and Aotearoa. And to RIAA's amazing working groups manager, Jess Rowe, for your incredible high quality work, dedication and project management skills. So please take this opportunity now to understand more from some of the Toolkit's amazing authors. Thanks so much, Guy.
Thanks, everyone. So I'm going to provide an overview of the introduction. I feel like everyone that's interested in the nature space has heard the terms impacts and dependencies a lot, but not surprisingly, these are what our introductions start with. So if we could just move to the next slide, please. So the toolkit starts off by placing investors in the nature space and pointing out the fact that all of our investments as investors depend to some extent on nature, and all of our investments have an impact on nature. And that's really where we're coming from in this toolkit. So what the toolkit does is it helps us to look at how, as investors, we can react to these dependencies and impacts and try to assess risks and identify opportunities within our portfolios. So everyone will probably be familiar with the statistic that about half of global GDP is moderately or highly dependent on nature. So of course that flows through into all of our investments. And also the degradation of nature can reduce the capacity for the companies that we invest in to provide the resources and services that we need. And one of the studies that we cite in the Nature Toolkit finds that about US 10 trillion of financial costs associated with degradation of nature through to 2050. There are lots of examples and statistics that we provide in the toolkit, but we try to keep it focused on everything that's relevant to investors. The next point that we make is that the impacts on nature will have a big impact on investment performance. And this is, if you just go to the next slide, just to show the main impacts of nature on investments. So the IPBES says that the main drivers of nature loss are land use change, invasive species pollution, natural resource use, exploitation, climate change. All of these different drivers of nature loss can come from the activities of the investments that we make. And what is changing now is that regulators are becoming more aware of the negative impacts that businesses are having on nature, and more increasingly tying a financial or regulatory incentive for investors to, for companies to address these impacts. So what we set out in the toolkit is a bunch of the new regulatory developments that will make, one of the things that we set out is lots of the regulatory developments that are making these impacts more of a financial concern for investors. So this is something that we're seeing coming through over time. I might just make one final comment before passing on to Joanne, which is that we, as asset owners, look at the impacts and dependencies within our portfolio on nature. We're increasingly asking our investment managers to assess these as well, the companies that they're investing in on our behalf. So what we're seeing is this increasing due diligence from asset owners that will flow through into the way we ask our managers to assess risk and identify opportunities on our behalf. So nature is really becoming a very important part of the way we look at overall environmental, social, and governance risk within our investment. And I think that that's going to be a big change going forward. So I'll stop there and pass back to Guy to hand on to Joanne.
Thanks, Claire. I'll hand the ball immediately over to Joanne Lee from First Centre Investors, one of our amazing contributors who led all of the work on the first section of the toolkit. Over to you, Jo.
Thank you very much, Guy and Claire. Next slide, please. Yes, great to be here today. Thanks to all of you who are joining. So I'll be walking you through the section 1, which is all about assessing nature-related risks and opportunities in existing investment portfolios. There are other interesting topics following from this, but this is the section where we talk about risks and a little bit on the opportunities. So here in this section, we're going to be covering how to identify, assess nature-related risks in investment portfolios, how to consider different types of assessments and what that means, and the importance of identifying, assessing nature-related opportunities in investment portfolios and how this can be done. So next slide, please. So oftentimes, if you're familiar with the climate risk assessment world, you'll be familiar with some of these jargons, this language around risks. So if you see the left side, nature-related risk, of course, we're going to be looking at physical risk, transition risk, systemic risk, but there are also factors that are affecting these risks. And you can think about exposure, how much of our portfolio is exposed to certain risk, which can actually impact the size of the harm or the financial impact. And also you can think about probability of threats, which can come as a frequency of this threats happening or impacting our portfolios, or it could be vulnerability, which now focus really on the impactee of how they're resilient and how they're able to deal with this impact. So all of these factors can impact the risk. And when I say exposure, there are different ways to assess this exposure. Concentration of material sectors, you can look at the exposure by sectors. You can look at the exposure by the commodities that these investee companies are using, or exposure by having operations in some biodiversity sensitive areas. Probability of threats, you can think of frequency of shutdowns due to water shortage or deforestation, increasing the frequency of landslides. And when it comes to vulnerability, you can think about damaged vegetation, making physical assets more vulnerable to flooding, or crops becoming more vulnerable to diseases because of climate change or other reasons. And also, if you look at some companies having no policy or no processes in place on nature, that could make a company more vulnerable. So all of these are really important to be considered. And if you click one more time, I think I just wanted to make this point that all of these things, if you have more exposure, if you have a higher probability of threats, if you are more vulnerable, then this could all increase the financial impact and negative financial impact. One more click. So yeah, throughout this, I'm gonna be introducing you three ways of assessing risk, and it's largely focused on the exposure section, although these other two are important. In order to consider the probability of threats and vulnerability, investors not only have to understand the sector and how the company is operating and where they're located, but they also need to understand impacts and dependencies across the supply chain. and need to have some location information. So while these are all really important, they can really impact the risk. We're going to be introducing you some of the ways to assess exposure, because this is compared to others, it's relatively easy way to understand from investors' perspective the exposure and related risks. So next slide, please. So I mentioned the ways, so I'll introduce you the sector level assessment, okay, location level assessment, company level assessment, and how this can all come together as a combined approach. So sector level, TNFD, Task Force on Nature-Related Financial Disclosure, they have already demonstrated that these are 22 priority sectors that are material for nature. We can map them across our investment holdings, or mapping sector exposure to certain nature loss drivers, as Claire explained to you. So what's good about that is that you can do this at relatively a high level, and there are many available tools out there, and it's easy for us to prioritize certain key sectors. For example, if your portfolio has high exposure to the mining sector, you can start with that sector by prioritizing that. And it's actually becoming the basis for many modeling tools. So this is, I think, a relatively good way to start if you're new to this whole assessment. The next one is location level. It's based, you can look at companies' headquarter locations, their operating locations, or if you have data, you can also include supply chain locations. Or you can do the assessment on locations with heavy pollution impacts, or with regulations, or you can start mapping companies with operations in key biodiversity areas. So this is all doable because you have some location level data. So if you only look at headquarter countries, this may not give you the full picture of their all the impacts and dependencies related to that, the company's actual exposed locations, but it's still, nevertheless, a still good start. And therefore, some of the investors I've seen are using country-based assessment just as a start to see, understand their exposures. But as I mentioned, the data on location can be sparse. So I'm not saying this is very easy, but I'll show you in an example, a case study following that, how investors are trying to overcome this challenge. Company level, you look at company data, actually policies, processes, what kind of controversial activities that they have, how are they engaging with the indigenous peoples and local communities, company scorecards, rankings, if there's any, and it can be done on a few priority companies, and it can be aggregated to a portfolio level. But is because this is all relying on company data, it has to have robust access to the company data disclosure or third-party data. Combined approach, I'll just introduce some of the examples, how this can all come together. Investors can assess companies with red flags that depend on high forest risk, soft commodities in the food sector, operating in high forest risk countries or near protected areas. So you can see how all of this understanding of the company sectors and locations all coming together. So of course, this is the really good way to understand exposure, vulnerability, probabilities, but also you need more sophisticated understanding of nature topics and data. Next slide, please. So yeah, lots of the tools out there. And if you hear from someone else, other investors, oh, we've already conducted some assessments, probably their scope of the asset classes covered is publicly listed equity and debt. This is typically the initial focus area. But the reliance on company voluntary disclosure could mean that the data may be inconsistent or incomplete. But there are other ways that nature-related assessment can be applied to other asset classes, such as private equity and debt. Of course, they don't have the requirement to publicly disclose the data, but sometimes investors, through their ownership, they actually have better access to location data, and maybe they have ability to influence the companies better through their maybe having seats on board membership, etc. Sovereign bonds, yeah, we have to start from the country level assessments. So it's focusing on country's physical exposure and vulnerability. And investors can also check for country level targets and roadmaps on nature. And there are various country level data sets out there available for investors to understand. But this will be done at a country level. And then investors will have to link the information there with their assessments on sovereign bonds. Next slide, please. So case study one, this is an example where the first line here, it's a group Sura, as a manager trying to prioritize which companies to assess further. And they face the challenge of accessing detailed location information, but actually they found out that some of the companies that are disclosing this kind of information already. And this is the actually same. I've looked at other companies as well. More than you think, companies are just starting to disclose some level of location-based information. And this is something that investors can also influence the companies by working with them, by talking to them, by also working with data providers to improve the location-based data. Next slide, please. Yeah, so the data is a lot of times if you hear all the discussion about how investors can assess nature, data will always come up as a main challenge. But what we say is that, a lot of this data is already available. It's not that there isn't enough data, but it's about how to use that data, how to access data, how to understand the data. So just to give you some examples of what's emerging, there are a lot of technology-based innovations coming up. So remote sensing using satellite-based imageries, drones. Once this data of all the images and locations of where things are located and how our biomes are placed, once that data is combined with the company ownership data, which company owns which assets where, then that could be really powerful for investors to understand the impacts and dependencies, maybe risks as well. And environmental DNA, often called eDNA, it has emerged as a rapidly growing field, and it's kind of taking the samples of some samples of species in highly biodiversity sensitive areas to really understand how these species and habitats and ecosystem services are functioning in that location. And in addition to this, scientists are using AI to get acoustic data to better understand the samples, how whales are doing in certain location in the ocean. Many innovations are coming up. So this is something that investors should pay attention to, I think, as we go and as the industry moves forward. Next slide, please. And the importance of looking at this as part of the broader ESG risk assessments. Throughout the toolkit, we really focus a lot on how we can better work with Indigenous peoples and local communities, and also the need to think about trade-offs and synergies with climate, with human rights, with other social issues. And also, I think the regulation is kind of expecting investors to better understand this, not looking at it as a silo, but together with other risks. Next slide, please. So very briefly, we talk a little bit about how to identify and address nature-related opportunities. And it's quite simple. If you look at this slide, it's all the risks that investors will be identifying through using this assessment methodologies. They'll see some problem areas or maybe problem companies. And then they'll see, maybe by doing this, by working with this company on such and such way, maybe they can reduce the negative impact on nature. And actually, it's using those points as a way to engage with these companies so that these negative impacts can be reduced. And maybe there's a room for these companies to create positive impacts. So the toolkit actually has a section dedicated for this to really help you identify and prioritize and engage using this information to engage with these companies. Next slide, please. Quick one slide to show you some examples. This is the left side example really showcases how an investor was able to prioritize certain issues based on the client expectations. They work with the clients and then they were able to develop a list of risks and opportunities informed by the client's impact and dependencies. The second on the right side example shows that they had a certain standard for companies to achieve in terms of, not creating too many negative impacts on nature. And when this wasn't really met by the company, they actually continued to engage with them because they were able to assess these problems and they prioritize those problems and really focus that area during the engagement until they actually result in changing this one company to implement a comprehensive global forest protection policy. So these are some of the examples I want to highlight to you. And after that, I think we will talk about how to assess other type of opportunities. So I'll hand it over to the next speakers. Thank you.
Thanks so much, Joanne. Hi, everyone. My name is Olivia Back. I'm an Associate Director at Pollination. I'm joining from the land of the Yagara and Turrbal people in Meanjin, Brisbane, and I pay my respects So I'll be speaking with my co-collaborator, Tarina, about this section of the toolkit. This section focused on assessing opportunities outside of the investor's portfolio. So while section 1, which Joe just spoke to, considered assessing unrealised nature-related risks and opportunities already within an investor's portfolio, the focus of this section is on defining what we mean by new nature-related investment opportunities and providing a bit of a methodology on how they can be identified and assessed. We've also discussed in this section some of the key practical challenges associated with pursuing new nature-related investment opportunities. Next slide, please. So simply put, new nature-related investment opportunities are opportunities outside an investor's current portfolio that present investors with the ability to create positive outcomes for nature and at the same time capture new sources of value. Many institutional investors are already actively considering nature and already actively investing in new nature-related opportunities. And what we've done with this section is provide a method and references to key tools and resources to essentially identify, assess, and then pursue these opportunities. So in the toolkit, we've categorized new nature-related opportunities into 3 broad buckets. The first is nature-aligned opportunities. So these are the investments in assets with lower impacts and dependencies on nature compared to the investments already within the portfolio. Examples include listed equities comprising companies implementing strategies and practices with the intention to reduce their impacts on nature. Secondly, we've got the pure play investments. These are the type of investments that are nature positive aligned companies and initiatives. An example would be technology solutions for nature, nature-based markets, and also nature-based solution projects. And then finally, we've got the transition opportunities. So these are the investments in companies and assets that are actively transitioning in line with the global nature positive goal and global frameworks with the purpose of deploying capital to accelerate the transition. A really clear example of this would be investment in a forestry company actively transitioning to a sustainable and regenerative model. It's useful for investors to adopt these categories as a filtering device for guiding opportunities into the different streams of assessment that I'm about to take us through. Next slide, please. So on to the assessment approach. Investors should essentially adopt a similar approach to assessment opportunities that are already existing within the portfolio and which Joanne spoke to a little bit before, and drawing on the TNFD's guidance. Best practice for investors engaging in or considering engaging in new nature-related investment opportunities is to structure their approach through the development of a nature investment strategy and target setting. If a strategy has been developed, the first step for identification and prioritization should be defining clear criteria and goals around opportunities aligned with the investor's nature and broader strategies. It's important to note that systems and processes for assessing new nature-related opportunities should be integrated with existing decision-making and risk management processes and frameworks, and subject to the investor's broader mandate and strategy, and such that decisions about nature are not being undertaken in isolation. So, of course, there are differences depending on the type of opportunity that's being considered and assessed, but there are some general steps to the assessment approach worth flagging. So at first, at the investment screening stage, investors must ensure the specific nature thesis of the prospective investment is understood and substantiated. This means assessing the claims sought to be made. Are they reasonable? Is it measurable? Can they be verified? In relation to nature positive claims in particular, caution should be applied. At this point in time, based on the global definition and global appetite, companies and assets can only claim to contribute to a global nature positive outcome and cannot in themselves be nature positive. Next is the due diligence stage. This is about assessing the prospective investment's impacts and dependencies on nature and the corresponding risks and opportunities. You can use the same tools as Joe has spoken to, such as Encore, IBAT, and the Aqueduct Water Risk Atlas. Then we've got the decision and execution stage. This is where you can turn your mind to the opportunities to negotiate contractual terms and devise KPIs that drive specific nature-aligned outcomes. Fourth, you can put in place infrastructure for MRV to ensure the ongoing evaluation of the investment's performance on nature. Ongoing and meaningful engagement with Indigenous peoples and local communities is also crucial, particularly for pure play nature opportunities like nature-based solutions projects. During the due diligence process, investors should screen for the involvement of First Nations and traditional communities, Assess the engagement practices of companies or projects, including assessing key transaction documents and processes for adherence to best practice and principles such as free, prior, informed consent, and evaluate the positive and negative impacts on these communities. Next slide, please. So like I flagged, we had 3 broad buckets of investment types. And in addition to what I've just outlined, there are some additional considerations for pure play opportunities and transition opportunities. For timing reasons, I won't go through all of them, and I'll just select a couple of examples for both. So in relation to a pure play opportunity like an NBS project, an investor will likely want to understand the natural capital value of the investment. Tools such as IBAT and the Species Threat Abatement and Restoration Metric, also known as the STAR metric, can be used to measure both the potential impact of the investment on nature and the contribution that the investment can make to goals such as reducing species extinction risk in a particular location. For transition opportunities, there should be a clear focus on evaluating the transition plans. This means assessing the robustness of the company's transition to a nature-aligned business model, including understanding the company's targets, the specific steps that they're going to take, the timeline for action, and the expected outcomes. It's also about ensuring the investee company is providing transparent disclosure of their impacts and dependencies on nature and their progress on their transition plan in accordance with best practice frameworks and guidelines. I'm going to pass now to Tarina to talk through one of the case studies that we provided in this section.
Thanks, Olivia. Tēnā koutou katoa, he uri tēnei no Ngāti Hine, rongo mai wāhine Waikato hoki, ko Tarina Williams tōku ingoa. So, hi everyone, my name is Tarina. I am a Senior Investment Strategist for the Sustainable Investment Team at the New Zealand Super Fund. We are a sovereign wealth fund in New Zealand, and our prevailing purpose is to see sustainable investment delivering strong returns for all New Zealanders. An example of a nature-related opportunity within our investment portfolio is Kaingaroa Timberlands. This represents New Zealand $2.5 billion or 3.3% NAV of our total portfolio. We have 42% ownership in this alongside our partnership with PSPI Canada and iwi, or Indigenous Peoples of New Zealand. So what is Kaingaroa? Kaingaroa is the largest plantation forest in New Zealand, the second largest in the Southern Hemisphere. It spans over 189,000 hectares in the central North Island of New Zealand, produces around 4.5 million tonnes of mostly radiata pine logs. They have its own private off-highway transport networks, a total of 300 kilometres in total. The uniqueness of the asset comes from, one, the trees and operations are highly nature-dependent assets, and two, the underlying land that sustains that growth is on long-term lease from local Indigenous landowners, or Māori, who receive this as part of their Crown Treaty settlement package. Kaingaroa works well for a few nature-related reasons. And the first is that the timber stands are predominantly planted on pumice soils. This improves water drainage, aeration, moisture retention, soil structure, and nutrient availability. The second is that the land topography is 75% flat. This is ideal because, one, there's reduced soil erosion, so this maintains soil quality and therefore tree growth. The second is the flatter the plain, the stronger it encourages more efficient water management use. The third is that it supports easier access and management of planting, thinning, pruning, and harvesting operations. And then the fourth is it improves health and safety of staff, of labourers in a predominantly high-risk sector. Another reason why Kaingaroa is a unique asset is that over 70 different species of plant have been trialled, resulting in radiata pine. And much like investing, this diversification strategy reduces the risk of investing too much into one species type that could be taken out by pests, by disease. And the other positive of this is that we are able to genetically breed a more commercial product that requires less management across the timber's lifetime. Last point is there is strong community engagement, and which in turn permits social license to operate on these lands. There are over 50 protected archaeological sites, many of which are important to IPLCs. There are 3,000 registered recreation persons, and they are predominantly from the IPLC or from the iwi or the Indigenous persons of that area. And they use these forestries mainly for hunting and for fishing. In many ways that investors use their endowments to their advantage, this asset does the same. This asset works with the land, and it works with the land and its people. Our role as investors is to continue to foster nature positive outcomes through continued support and engagement to maintain FSC and PEFC certification, to implement the Restorative Development Goal Strategy, to respect tangata whenua or ILTCs and their land, to continue investing in nature-related initiatives. And whilst not currently considered an impact investment in the New Zealand Super Fund, there is an ambition to see it as one. So we are working with them on achieving that. Thanks, Olivia. I'll pass the time back to you.
Thanks, Tarina. I'll just wrap this section up for us. So like I said at the beginning, at the end of this section of the toolkit, we acknowledge that there are some clear challenges with pursuing new nature-related investment opportunities. We've included some of those on the screen. For example, in nature-related assets such as forests and plantations, they may yield a higher risk assessments due to their dependency on natural capital and exposure to physical risks. But these risks should be weighed against the positive impacts of the investment and the implementation of risk mitigation strategies such as fire prevention and pest management strategies. Similarly, there are some challenges with nature markets given the regulatory uncertainty and the nascency, particularly of biodiversity credit markets. But like I said, we are already seeing investors pursuing successfully new nature-related investment opportunities, and establishing a clear strategy for the investor's approach to nature can provide guidance and reference point to navigate challenges. And we hope that this toolkit will also prove to be a really useful resource in that respect. So I'm now going to pass on to Julia, who's going to take you through section 3 of the toolkit.
Thank you. Thank you to everyone up to now. This has been a really great project to be involved in. If we can move to the next slide. So section 3 looks into engagement, policy, advocacy and communication. So it's really rounding off all of the activities that we described before into the next steps. When we looked at RIAA's benchmark reports in New Zealand and Australia, it becomes clear that the topic nature and biodiversity conservation is already in the top 5 most popular issues investors are engaging on with companies in our region. So we know it is something that has made it into the investor stewardship activities in our region already. If we go into the next slide, so going through different engagement areas. So engagement on nature-related topics is particularly important because, as we've already heard, and I'm sure everybody's heads are spinning, there's just a lot of complexity around the impacts and dependencies and the ongoing need to improve company disclosures. On company disclosures, but how each investor will choose to structure nature engagement will obviously vary. There is good ways to integrate nature into existing engagement and stewardship structures and explicitly build it out from there, or to make nature a new engagement program in itself. In terms of the topics and the areas and how to determine what to do, it really depends on each investor's nature-related priority areas. And we've already heard before how this toolkit can provide some guidance and suggestions on how to build this out. A very important note and something that we were really keen to recognise is that there's a lot of opportunity to leverage existing engagement themes. Many investors are already engaging on specific nature-related topics such as water, waste, chemicals, effluent, deforestation. They're obvious ones to link into a broader nature engagement program. But there's also, it's very important to be mindful of intersectional links with human rights, for example, and Indigenous peoples and local communities, and thinking through how nature can be integrated into non-nature specific initiatives that already exist. In relation to setting investor expectations and metrics, it is really important to consider the rationales around the engagement. So setting out part of the engagement program, it's important to go back to the overarching goal and linking back to the work that you do early on in identifying within your portfolio what your key focus and high risk areas might be. So it could be related to a specific nature topic or thematic, such as deforestation or water. It could also be a focus on a specific sector that has a very high impact and or dependency on nature. Another way to look at it is a specific geographic region or a biome, including tropical or subtropical forests. And as Joe has nicely outlined already, you can also obviously combine these approaches to find your focal areas. One of the big challenges that we see for investors is that nature-based risks and impacts are mostly very, very localized. An engagement program without having the right information or capacity in place might be difficult or might be a bit daunting to look at. But what we're recommending is that you start out, if you're starting out with engagements on nature, is to set your program around a company's general strategy. Ask questions around also around supply chain intelligence and data. Where are they at around disclosures and governance, and also consider initiating a conversation around double materiality, because that might tickle out some of the related risks and impacts before you go into the deep location and specific areas and discussions. There's a number of useful frameworks out there already, and we mention them throughout the toolkit. This includes Science-Based Targets Network, Nature Action 100, and also the World Benchmarking Alliance. They have developed a nature benchmark, for examples. More resources, as I said, are provided in the toolkit, and we'll show you in a few minutes how to access them. In relation to collaborative engagement, there's a number of existing collaborative engagement initiatives active. And again, we have compiled a list of different initiatives. It's not an exhaustive list, but a good starting point. We include principle-based and specific subtopic engagements, as well as broader nature-themed engagement initiatives. When it comes to proxy voting as a tool, I'm sure everyone will straight away at the moment think about Woolies and Coles, but generally we can't say that there's yet a huge number of broader nature-related shareholder resolutions, but when we looked into it, we found plenty of related topics that have been brought to shareholder meetings around nature and biodiversity in the last 1.5 years. So we have some examples in the toolkit around biodiversity, deforestation, supply chain water risk, and also sourcing minerals from deep sea mining, for example. And I think it is always important that linking, tagging, and taking nature-related considerations into account when looking at voting signals is definitely a tool investors should not dismiss. Another tool that is increasingly being used and we talk about in the toolkit is policy advocacy. And I think particularly in nature, it is important, or is something that will likely feature quite heavily to overcome some of the natural commons challenges that investors and companies are facing. So reviewing and ensuring the right policy frameworks that are in place is first of all important to accelerate nature finance, so unlocking the finance. And I think some of you who might have been at the Nature Positive Summit, there was a lot of discussion and a lot of hope put on us, so no pressure. And then the right policy setting will also be a pathway to for nature-related impacts and dependencies to be brought to light. So that makes it easier then for investors and companies to address and take them into account and address them. In terms of different topics, there's a lot that needs to be considered and thought of, but some examples and broader systemic issues that will likely need to be tackled through policy advocacy include ensuring the empowerment of Indigenous peoples and local communities, protection of specific biodiversity and ecosystems, functioning nature markets, and of course, improvements to environmental data and information on the global and national level, but also nature-related disclosures. If we go to the next slide, in the toolkit, we have, in relation to these topics that we talked about, a number of case studies. I encourage you to dive into it and read through them. They should give you some practical examples to the theory that we're presenting. On the next slide, so I'll try to finish it off quickly. We're talking about communication, and that is internal and external communication. One of the big obstacles that many of us face is to build the internal business case for nature obviously the reason we're all working on this toolkit, hopefully this will help you with that. One of the main messages here is really that while data sets and in-house capacity is still evolving, and Joe has already said there is a lot of data available, the question is really how to integrate it, how to use it, and going through the weeds. It's already possible to present information to a board or an investment committee using existing data and metrics. It's really about outlining exposures and risks, finding specific themes that are relevant to your portfolios and assets, and focus on specific sectors. Existing information will already help you to identify the gaps and talk about them, see how you might be able to fill them, and then also starting to identify where opportunities may be and setting out pathways on how to access them. In relation to external reporting, nature as an investment and corporate disclosure topic is following the playbook of climate reporting. Reporting and disclosure on nature-related topics will likely be required in the not too distant future. We've seen that ISSB and TNFD are starting to work together through a working group. We know that this is a blueprint to have reporting translated into national reporting frameworks across the globe. So that means investors should start to prepare. The TNFD is the key reporting framework for nature-related disclosures, and there are multiple guidance papers, including for financial sector companies and organizations. Just before I hand over to Maddie, a final word of caution. It is really important to evaluate any public statements such as nature positive or nature-related claims with a greenwashing lens in relation to specific investments, but also stewardship activity. So the toolkit has a clear definition of what nature positive means and how the global concept of nature positive fits within the corporate investor context. So really encourage you as well to read this and incorporate the thinking around that in your messaging. And with that, I will pass on to Maddie, who will take you through the excellent and very deep resource list that has been developed.
Thank you so much for that, Julia. And I also want to echo your comments around what a wonderful process it's been just to be a part of this initiative with everybody. So well done, RIAA, for wrangling us all together and going through many, many rounds of edits. We really appreciate your patience. And I also just want to acknowledge that I'm on the stolen land of the Gadigal people today. So you can probably jump to the next slide there. Thank you, thank you. So today I just want to spend a few brief minutes going through some of the key functions of this kind of rather unusual looking appendix. Everybody knows how to use it in conjunction with the main report. So basically when you download the report, as you're reading through, you'll notice these little information icons, which you may have seen on some of the other slides today as well. You can just go back one, that's all good, thank you. So yeah, so this one, for example, it says, need help finding tools and data, toggle to the tools and toolkits tab or data and databases tab in the appendix. And that's basically a little instruction and a little prompt to say, hey, like you're looking for more resources on kind of what you've just read, jump into the appendix and follow these instructions and you can kind of find out more basically. So if you already have the appendix, you don't need to download it 100 times by clicking on that little link again, but just open it up, jump on in, and I'm just going to share my screen and I'll show you exactly what that looks like. So hopefully this will work. Here we go. Can everybody see that? Yeah, fantastic. So the first thing you'll land on is that little README tab, which is, pretty good to go over if you just want to understand what each of the categories of information mean and how to interpret the appendix. But if we think back to that little information icon that we saw, it was telling us to go to the data and databases tab and the tools and toolkits tab. So you'll see here we've got data and databases and tools and toolkits. So we'll jump to that tab. And then it also told us that we could filter by spatial capabilities or level to like further refine types of tools that we wanted. So what we can do is we can go to one of these filters across here, spatial capabilities, for example, and we can use the filter options to isolate, for example, tools with spatial capabilities. And that'll just reveal a filtered list of the tools that might be most relevant to us. We've also got the option here under level to search by, tools that kind of present their analysis at the country level or the sector level or the location level. So you can further kind of refine your search there. And I think somebody also asked a question in the chat around publicly available resources. So most of these are publicly available. And when I say these, I mean the guides and frameworks, you know, the reports, they're all publicly available. The ones that generally have kind of more proprietary information and costs are the data and databases and the tools and toolkits. So I have included this free version tab here. If you like free things like me, then you can search by that and just isolate the free toolkits that, free data and databases that are available, or it's just a free version. So you'll get some level of kind of publicly available information there. And the same with the tools and the toolkits. So you can search by spatial capabilities, you can isolate the free versions, and then you can further kind of, you know, search by level to isolate relevant information. But, you know, this also works as a standalone document. You can search for anything you want, really. And if that sounds quite overwhelming, then you can probably just start at the full resource list where we've got kind of if you don't know what type of tool you want to look for, but you've got a general indication of something that you want to do, maybe it's a risk assessment, then you can use the relevant toolkit section filter here and filter by things like, you know, assessing impacts and dependencies, identifying opportunities, and so on. So that can be a pretty useful place to start. And importantly, we've also included this tab here for Indigenous peoples and local community resources. So those are things that have either been published by or for IPLC stakeholders. And yeah, so this can also be a great place to go to just isolate those and find out more. But I think that's pretty much everything from me. I'm going to hand back to Claire now, and thanks again for listening.
Thanks, Maddie. It's just an incredible toolkit at the end of the toolkit. So yeah, please get in there. All right, we'll jump straight into Q&A. So one of the questions is, given the evolving landscape of market frameworks, for example, SBTN, what can an investor do to advance on nature? I'll open it up to I don't know, Guy, whether you want to do this one, or Olivia.
I'm certainly happy to kick off. I think, you know, it'd be great to hear from Joe as well, Joe Lee, and Liv as well, just in terms of getting started. We've tried to, you know, the structure of the toolkit is kind of that more logical, you know, what is nature, moving into risks and then moving into opportunities. We really hope that the kind of activities that an organization or investor can do to get started enable them to do many of those things at the same time. So when you're starting to actually have conversations with your investees, when you're using the tools that are available to understand that interface with nature and where those impacts and dependencies are, to start to have more informed conversations around prioritizing risks and opportunities, is that our hope is that some of those same conversations, tools, and resources enable you to be looking at both a risk and an opportunity lens at the same time. So it shouldn't have to be an either or. Should my first play around nature and my first kind of set of conversations be just driven by a risk or an opportunity, that some of those things can happen. And most of the toolkits, frameworks, resources that we've referred to within the toolkit enable that kind of framing. So that would be my first thing. Obviously, there's a really relatively personal and individual decision that needs to be made by an investor or a company around the extent to which they go higher level and start to look at, you know, their broader exposure across their portfolio versus actually kind of moving quite quickly to going a lot deeper down to a specific investment or a specific activity on the ground. And there's really compelling reasons for and against, you know, staying high for a certain level before actually when and how you kind of go deeper. And you know, that's conversations outside of this webinar, but I might hand over to Joe if you had any reflections, even from your experience at First Sentia, around how you kind of get started.
Yeah. So while we wait for the guidance from SBTN and for financial institutions, as a signatory to Finance for Biodiversity Pledge, they already have some guidance and frameworks for financial institutions to use to set targets. And following their guidance on target setting, we recently actually published our first initial nature-related targets. So before we get to the portfolio level of like, okay, this is our portfolio, this is a percentage of companies that are involved in deforestation, we're going to bring it down to this percentage. That's like portfolio level kind of target to really look at the impacts. at some point, hopefully soon, we're going to get there. But before that time, there are a set of other types of targets that financial institutions, especially investors, can use to set targets and to follow up. Mostly focused on disclosure, monitoring, engagement, training, governance. These are other areas, like mainly kind of processes or policies oriented, but nevertheless, still very important for us to understand our impacts and dependencies and eventually get to the portfolio targets. So there are other ways that we can do already. And as you can see, FSI has already set our targets. Thank you.
Thanks, Guy and Joanne. That's really helpful. We have two questions, one from Sherelle Pollack and Frida Pernay, both wanting to know when we or how often and frequently we will and when we will be updating the list of resources. So Maddie, they want you to keep working on this thing, it seems, but I think we have talked about the fact that this is, as you say, in your question, such a rapidly evolving space. And we do think that it makes sense to look again at the toolkit in the not too distant future. I don't know whether that's sort of in a year's time. I'm looking at Guy and Maddie for whether that's possible or 2 years. But I think that we can be flexible as well. Maddie, I don't know if you want to pop in here, but if there are resources that people want to share, if RIAA members want to share with the team, it is possible to add them to the resource list, I believe, but I will let Maddie jump in.
Yeah, thanks so much. That's actually a very timely question because I was just messaging Jess saying, sorry, I forgot to talk about toolkit updates. So it was perfect. Thank you for whoever asked that. So yeah, absolutely. I was going to say, please, if you've come across any resources that you'd like to see in an updated appendix, please feel free to email them to Jess at RIAA. And we are looking to do semi-regular updates with that. Additionally, the information that I've included there, it is interpretive. So if there's also other changes that you'd like to see, maybe different information or ways of breaking down those tools, different categories, or you notice anything that you'd like to change, any feedback is welcomed as we continue to kind of update that resource into the future. So the answer is yes, it will happen. We haven't confirmed how frequently and what that will look like, but that's definitely a conversation that we're progressing. So please feel free to help out and send through any comments or resources you'd like to see.
Thanks, Maddie. I have a question about the key challenges from a data perspective that are present when outlining the investment risk to the board. And this is a question for Julia. What is the gap that needs to be addressed to articulate the risk and secure board buy-in? Julia, do you want to jump in there? And others feel free as well. Julia?
Yeah, if others have additional comments, please add to it. I think the fascinating thing is with nature, it's the first time everyone acknowledges that there's a lot of data available, but it is in turn a different challenge. So you have there's a lot of different type of data available as well that we're as investors not necessarily used to deal with, and we're also trying to have this dual challenge of company information and heavily localized information, how we're bringing these two together. I think the main message that we wanted to send is don't let yourself be overwhelmed with it when you're building your business case, because there are already a lot of resources available, a lot of ways to identify overarching potential risks and opportunities to your portfolio that you can start to outline the principles that we're dealing with. You don't have to show, of my few hundred companies in my portfolio, I can tell you exactly this location has this specific risk in relation to this specific species that has been assessed or found here. What you need to go back to is have a high level. Here are the biggest risks. These are the sectors that we're dealing with. These are the countries that we know our portfolio companies are operating in. We have a lot of companies operating in this country, for example. We know this country has a high exposure to these type of nature risks. So there are things that you can already do to then, based on that analysis, then you start out to build out the business case on things that you might need in addition to then address those risks. But don't let this overwhelming amount of data that you sit there that goes into really deep detail that you might not be the right expert to even determine if that's the right data or the wrong data overwhelm you to deal with this topic, I guess.
Thanks, Julia. good message to end on there, and we need to end, unfortunately, although there are a lot of questions in the chat. I'm going to hand over to Guy to wrap up, please.
Yeah, thank you so much, Claire. And we're seeing some wonderful questions come in. Please get in touch with Jess at RIAA if you would like to try and have one-on-one conversations with us or any of us around how your use of this toolkit might work out. We're also in the Nature Working Group. Whether you're a member of RIAA or not, we're really welcoming those to participate in our working group meetings. If you might have a case study or something you want to share with our broader working group, we invite you to participate in that. So just really quickly, thank you so much for your time. These are super busy days and we really appreciate the contribution. My number one reflection is just by the participation and the interest. This is obviously a topic that's really important for a lot of you, and so your time and participation is really appreciated. This whole toolkit has been a super collaborative effort, a range of contributors, and we're really keen to extend that collaboration to all of you, for you to take the toolkit, for you to thrash it about, to provide really critical feedback, and most importantly, don't let it fall in the bottom drawer. We want this to be something that is useful, and particularly, as we've said a number of times, the appendix and the resources that we have, we hope that they're really useful for you. I think another quick reflection, there's many ways to get started in bringing nature deep into your investment decisions. There's no good reason that we've come across in all of our work to delay action. There's really so many reasons just to get started. It's not an either or between risk and opportunity. You can do some of these things at the same time. And I think most excitingly, an insight from the work of the toolkit and this conversation is you're often sitting on some real important unrealized value within your existing investments. And there's a huge opportunity to try and improve distressed assets or to highlight and elevate things that have contributions towards nature positive goals. So thank you so much. Please reach out to Jess, to RIAA, if there's ways that you would like to support the amplification of the toolkit, the ongoing work of the Nature Working Group, or as Estelle said, any of the other working groups here at RIAA. We really appreciate it. So go safely, tread lightly, and have a wonderful rest of day.